Hello, everybody. Welcome to the Fintech Combine. I am your host, Kris Kovacs, and this is the series where we talk with and sometimes about community-based institutions, their digital and business transformation projects, and we meet the innovators, entrepreneurs, and fintechs that make it all possible. On this episode, we're speaking with Fred Eisel, the president and CEO of Vizo Financial, about how corporate credit unions are collaborating with fintechs to bring new services to credit unions. So if you're ready, let's suit up and get out on the field. Fred, thank you very much for joining us today. Why don't you start by telling our listeners a little bit about your background and what the role of Vizo Financial is as a corporate?
Well, thanks, Kris, and very much appreciate the invitation to your podcast this morning. First, about me, I've been in the credit union industry my entire life. My father worked at a railroad credit union in central Pennsylvania, worked at the railroad, and then they asked him to be a part-time teller. He was looking to make a little extra money in the evening to raise, we was raising a couple kids, he and my mom. So he was a part-time teller at the credit union. They asked him to be on the board. He ended up being chairman of that credit union board. He was asked to be a league, one of those league consultant type folks, a representative for the chapter. So he was traveling around Pennsylvania as a league representative for that credit union. So he got very involved with the credit union. So growing up, that's all I knew. And so when I got out of college, my brother was already an auditor for the league up in Pennsylvania. And so I had an economics background and I looked at the corporate credit union, didn't really know what the corporate credit union did at that time. I knew it was different from the league. It was different from a regular credit union, but I applied. They were looking for an investment analyst. That was my focus and interest. They didn't have a position available at that time. They were going to have that position a year from that interview, but they had a position available for an MSR making not much money. And I took it. This was early 90s. So it was a great learning environment for me to be an MSR at this corporate credit union in Pennsylvania. A year later, became an investment analyst, went back for my master's degree, got my MBA. And then in 2000, my wife and I and three young kids decided, we're tired of the Pennsylvania cold winters. Let's head south. And the corporate here in Greensboro, North Carolina was looking to grow. And I came down here in 2000 as a senior vice president, chief investment officer, and worked in that position for 24 years. And then in January of last year was named the president CEO of the corporate. So in the credit union industry, my entire life, that's all I know. And in the corporate credit union industry, my entire career. And for a corporate, what do? We are kind of an aggregator and we're supporting natural person credit unions. So you and I are a member of a credit union. That credit union needs similar services. They need to find some place to put their liquidity. They do need a line of credit to cover some of their items. They have payment operations. They have a need for risk management solutions, investment advice, and investment solutions. So that's what the corporate does. We're kind of a business to business environment. So, most credit unions, pretty much all credit unions work with us. Most individuals have no idea what a corporate credit union is. We don't have billboards, we don't market, we don't advertise. We're a B2B. So we are an aggregator of liquidity and variety of solutions to help the credit unions be more successful and grow.
And some of those solutions are technology solutions.
Some of them are technology solutions. We were created originally when credit unions were using banks. And of course, the banking and credit union relationship's never been good. And so the credit unions, a long time ago, I think we're in our 50th anniversary as a corporate credit union. The credit unions decided, rather than send money to the banks and utilize their services, why don't we create our own credit union-owned entity? And so let's capitalize a corporate credit union. That's what started it. And back in those days, there wasn't much technology. It was just managing money and payments. And payments back in those days was checks, physical checks. And so the corporate had a basement full of reader sorters and literally processing thousands of checks a day. Over time, that became more technologically driven, where the checks didn't come in, they were files that came in. And then there was ACH and there was wires and more things came that way. And over time, obviously, where we're at today, where you have a lot of technology supporting credit unions, the corporate is there to support as well. So payments now today we're at FedNow, RTP,
Mm-hmm.
instant payments is all technology.
Right.
We have a risk management group that provides risk solutions to credit unions because cyber security, cyber
Mm-hmm.
attacks, fraud has become a massive issue. So as a corporate,
Yes.
we try to provide some of those solutions. What we've done here recently is, we're not trying to be a technology company,
Mm-hmm.
but we do have capital, strong capital. We realize we need to partner with other uh, individuals, fintechs, other technology partners to deliver and help deliver some technological solutions to credit unions to help them grow and to help them survive. And so we may not necessarily create them internally because we're not a tech company, but we definitely
Mm-hmm.
have the capital and the ability to partner with folks that have that. And a lot of partners like to partner with us, a
Mm-hmm.
lot of vendors, because the vendors are out there have a solution. They don't have the relationship that we have with all of the cranes. So they have a
Right.
solution. We have the relationship. Typically, it's a great partnership that we can cover up and down the East Coast nationally with a lot of crane relationships we've had for many years and deliver some of these technological solutions that the cranes may not be aware of.
How do you work with your customer credit unions, or do you call them member credit
We
unions?
call them members because it's
Members.
it's
Okay.
it's 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 the same concept as a credit as you and I join a credit union. We're a
Right.
member. The credit union joins us. They have given us capital, so we
Okay.
in turn we say the same thing. So there are member credit unions. We are allowed as a corporate. We serve member credit unions, so a credit union that's joined us and given us capital. But
Mm-hmm.
we will also work with credit unions that don't give us capital. And so
Mm.
we still call them members, but they may not have full capital with us. But we can work with any credit union in the country.
How do you work with your member credit unions then to understand what their technology needs are and know where the opportunities are for you to bring in partner solutions or to make those available to them?
It is a lot of talking. We talk, we survey, we talk, and we talk. We have account managers, corporate account managers, go out and
Mm-hmm.
visit our credit unions, and they'll come in and stop into your shop and say, "Hey, Kris, you know, literally ask you what are you challenged with? What are you working on?
Mm-hmm.
What's kind of giving you what's your pain point?" And lately, it's been technology and data.
Mm-hmm.
For many years, it was I'm trying to find more liquidity. I need help with my investment portfolio. I need help with some risk solutions. And so we find that information out today. It's data, AI, technology.
Mm-hmm.
So just physically boots in the ground, meeting them in person at their shop, talking to them. We have a lot of education, which we can talk about here later. In-person education. We do a lot of webinars. We do a lot of roundtables. So we get information that way. We have a board of 9 folks that are made up of our membership that are credit
Mm-hmm.
union CEOs, CFOs. So planning sessions and strategic sessions during monthly board meetings, there's discussion of, hey, could the corporate
Mm.
do this? Could the corporate invest in this? This is what we're really struggling with. We do annual member surveys like everyone else and have the typical questions, but we add 2 questions at the end of ours on one, what are you working on currently? And
Mm.
2, what's your biggest challenge going into the next year? And so that gives us some verbatim comments of what they're trying to solve. And
Right.
this past year, it's trying to grow. It's data and AI. And we did that first of last year. Went out to some of our larger credit unions and said flat out, where can we help as a corporate?
Mm-hmm.
What do you need? And the predominant thing that came back is we have a lot of data, don't know what to do with it,
Mm.
and we need to embrace AI and don't know where to go. Could you help?
Was it that led you to partner with Vertus AI?
That's exactly what it was. And it was just fascinating to me as I look back how it all kind of came together.
Mm-hmm.
We have in the corporate space, we have capital from our credit unions. They've given us
Mm-hmm.
permanent capital. We also just grow capital organically through retained earnings. Obviously, during the financial crisis back in 08, 09, the corporates had a problem. We lost a lot of the capital. The way the system was structured, we lost a lot of capital and lost a lot of member capital.
Mm.
Um, but our members saw a huge value in the corporate, and so they
Right.
recapitalized us. Then we have rebuilt retained earnings. Now, today, we're sitting at the end of February. We're Vizo Financial. We're sitting on total capital of $607 million. So
Hmm.
we are extremely well capitalized.
Yeah.
um, the best capitalized we've ever been in our history, to the
Hmm.
point where now what do we do? What do we do?
Mm-hmm.
We can keep building capital, but we've got the double the need to be well capitalized. So how do we give
Right.
back to our members? We talked to our members and said, what do? We can give you lower fees, maybe give you stuff for free, give you higher
Mm-hmm.
rates. And our members and our board said, reinvest in partnerships, QSOs, and technology to not only for the corporate, for us to have a viable entity in the next 3 to 5 years, but help us credit unions find some solutions. And so rather than build capital, it was using that capital to invest and buy a QSO, start a QSO, partner with a fintech.
Mm-hmm.
For early last year, we literally went out to a number of our members and said, where can we help? And the resounding message was, we've got data, don't know what to do with it. We need to embrace AI and we want to grow.
Mm-hmm.
Our member survey, when we asked those two questions I mentioned earlier, what you're struggling with? Grow.
Mm-hmm.
What are you working on for the next year? Grow. 30-40% of the comments were grow. Grow loans, grow assets, grow
Mm-hmm.
members, grow. So that we knew that's where we were headed. We knew internally we needed to help credit unions grow. And if you look at the NCUA data on even $500 million credit unions and below and assets and below,
Mm-hmm.
there's negative loan growth, negative asset growth,
Yes.
negative member growth. It's just a constant, and that's a challenge for the industry.
Yeah.
So we knew that's where we needed to go. And it just so happened um, friends with Mark Caverly. I think
Mm-hmm.
you may know
Mm-hmm.
Mark. He introduced us to a company called Vertus AI
Mm-hmm.
last spring. Now we met with Vertus AI in the spring in Durham, North Carolina, and they had a solution and said, "Hey, we have a solution that's AI powered
Mm-hmm.
that allows credit unions to grow." And we feel, as I said earlier, we want to get this to the masses, but we don't have the credit union connections you guys do.
Right.
And likewise, our members are telling us that they need a solution just like this, and we don't build this. You guys build it, so let's partner. And
Mm-hmm.
so we took it to the board in the summer of last year. We didn't invest in Vertus. We
Mm-hmm.
bought pretty much a subscription service where we're pre-buying subscriptions and taking a risk to use some member capital to
Mm-hmm.
have a 3-year plan to let's get this out to the membership. We also used an outside consultant for our strategic planning session for the first time in many years. And even before the outside consultant kind of knew what we were doing, their message initially was, we feel the corporate's in a great position to kind of lead in technology to deliver AI solutions to our credit unions. They're like, well, you just kind of put the cherry on top because we've already gone down that road, and you're just reinforcing and solidifying our path strategically. Makes a ton of sense. So
Right.
the partnership with Vertus AI was just perfect timing last year, and it already kind of taken off at the first of this year.
Is your approach to solutioning geared toward smaller credit unions because they don't have the resources, or maybe I'm reading the tea leaves incorrectly, right? I wonder the difference between serving a very large credit union who goes out and is researching data, is researching AI, is doing those things, versus those really vulnerable $500 million and below credit unions that are really struggling out there, right?
Yep.
Do you find that your services resonate more, the partnerships you bring in resonate more with the smaller credit unions, or are you seeing that demand across the board?
We're actually seeing demand across the board. We have seen kind of a shift here recently, not for everybody, but for many years, post financial crisis and the large credit union being larger, we can kind of build it ourselves. We got this.
Mm.
We had a number of credit unions, larger credit unions, that did not rejoin us and recapitalize us after the financial crisis. We had 6 to 8 of them last year rejoin us and recapitalize.
Mm.
And the message from them was, we're bigger, but we got to start to be a little smarter. We're trying to do
Yeah.
everything for everybody. We're trying to build everything ourselves. We've got to be smarter and more efficient. Again, you look
Yeah.
at some of the data, the performance isn't great. And so they rejoined us and saw the value in the corporate and aggregation, and where we can partner with other folks and deliver them solutions that otherwise, sure, you can build it internally,
Mm-hmm.
but is that the most efficient way to build it? So
Right.
internally, we look at our core focus is the $500 million credit and assets credit union and smaller. So
Mm-hmm.
yes, we feel the value is helping the small to mid-sized credit unions survive. They don't have the resources. They're not going to have the data analysts or data scientists.
Right.
We can deliver them a solution at an aggregate price very inexpensively. So
Mm-hmm.
that is our key. So for us as a corporate, it's a challenge because
Yeah.
we don't want to disregard the large,
Right.
because the large are exponentially getting larger. And
Yeah.
we've got to focus on the small to mid because they need the assistance. But what we're finding is we don't want to disregard the large because some of the large, not all, but many of the large are
Hmm.
looking at us like, you know what, this is a slick solution. We can't
Yeah.
build this internally. We can't maintain it. You build these things internally. It's great. Well, now you got to continue to maintain and support.
Yes.
And so the target market's 500 million and under, but
Right.
realistically, it's anybody, and we're finding
Right.
more of the
Right.
larger cranes are engaging because they see that value there.
So the smaller ones are pushing for solutions that help them engage, thrive, and survive, and the larger ones are pushing for the same solutions, but they're looking for shared solutions that allow them to gain efficiencies.
Yeah, and even for the large credit unions, the Virtus AI solution is a large solution. We
Mm,
have worked with Virtus to create what they call the Know platform, KNOW, to know your
mm,
member.
hmm.
And that's a smaller subset. So if you're a larger
That's
credit
cool.
union, you can sign up for the full Virtus AI platform. The Virtus AI Know platform is just strictly focused on growing your current membership. So your
Gotcha.
credit union may have 50,000 potential members, but you really have 25,000 are totally engaged. The
Hmm.
Verse AI Know program is, hey, you got Fred and Kris in the door. You got to get them to utilize you more. So while credit unions have gone association or community charter and trying to get more new members in, it's very
Hmm.
hard. Verse
Hmm.
AI Know program, the basic platform we're delivering to the small credit unions or small to mid-size are, there's a lot of members in your shop that just need more engagement and
Yeah.
utilize this to engage more. Now, once you're prepared to grow more outside of that, um, then you can use the bigger platform. And the same goes for
Right.
the large credit union. It's $1 billion shop. You got a lot of members that are not utilizing to the full capacity, especially the
Hmm.
small, or especially the younger member.
Hmm.
Um, they want engagement. They want
Yeah.
you, the credit union, to know me, and that's the stumbling block. We did a presentation at GAC. We had a session at GAC a few weeks ago where
Hmm.
you and I talked, and it's the older member that says, yeah, but you're going to have like my data. No, we don't have personal information in Vertus AI, but you know what I'm doing with my life path at the credit. You know where the money's kind of going, and I don't know if I like that. And my message to that individual was, the older generation does have a problem with that, but if you talk
Hmm.
to the younger generation, you take all my data. I
Take
want you
it.
to
Just take
I,
it.
I want you to tell me what I should be doing. That's the new
Yes.
generation. And
Yes.
so that's where Vertus AI is, stop the messaging there is stop talking about demographics and I'm trying to capture the millennial. We've been saying
Hmm.
it for 10 years and the millennials now are 30 to 40 years old. It's looking at your member behavior, not your
Hmm.
demographics. What's the member doing? So you got 20,000 members and you want to have a CD promotion for 13-month CD promotion. You can send it out all 20,000 members, but this
Hmm.
18-year-old, 22-year-old's looking for the first used car and care about a 13-month CD special. That's not their space. For
That's
the
right.
retiree, that's where they're at. So you just got to know your members more, and that's where the Vertus platform comes in. So demographically, some members don't love it. Some executives at the credit unions are like, kind of creeped out about it, but you need to understand the retail side has been doing this for a very long time.
Yeah. Yeah, for
Credit union
sure.
industry needs to get very much improve their technology, but you've got to ramp up and get to know your member way better. Especially, you look at open banking. It's coming. It's
Yep.
actually kind of here already with Plaid and some other things. That's all about information sharing. So if you're a credit union that doesn't have newer technology and not embracing AI and this member behavior data,
Hmm.
you're going to be more left behind going
Yeah.
forward where the future's going.
100% agree that understanding your member, understand and being able to access that data, and then being able to have the tools to deploy that information, right? So
Yes.
it's I can know one thing if I can run analysis and things like that and say Kris is really going to be a good candidate for a mortgage in the future, right? But
Yep.
how do I deploy that? How do I get that to them? How do I educate them
Yeah.
about what's available to them? I think is a really key part of that last mile, and that's where some people do it really, really well, right? I mean, they've closed both sides of that gap. Do the
Yep.
analysis, do the delivery.
Yep. And what we've done and what we typically do at the corporate is we know how this goes, and so we could partner with Vertus AI and just try to sell that platform
Hmm.
and see what happens. Where we're successful as a corporate is when we invest in people and we have somebody internally support and walk you, the credit union, down the path. So we
Yes.
just recently brought on board, started in March, VP of Data Analytics, and this is an individual that worked for the company in the past in the
Mm-hmm.
sales side, went off and managed a credit union for the last 5 years, a $100 million credit union. And when we came to him initially about Vertus AI, he's like, I mean, I've been needing this for a long time. This is perfect for me.
Right.
Um, Ended up bringing him on board to manage that platform. And
That's
so,
great.
so he can go out to you, to the credit union and say, hey, Kris, you run a $100 million shop. I've been in your shoes. And
Mm-hmm.
you sign up for Vertus. We're not going to leave you alone. We're going to
Mm-hmm.
help you walk the path of here's the dashboard, here's the data. You can
Yes.
drill it down, and then I'll help you. How do you then deliver? What's the deliverable? Well, do a
Yeah.
marketing campaign. What's that look like? Do we do an email? Do we? So we will help through that process. Vertus has support as well. So
Right.
this isn't a solution with sell a platform, walk away, and good luck to you.
Right.
We have staff on side inside to help with
Yeah.
the path of getting the data and then executing on that data. We think that's very important.
I really like the idea of you as a partner providing that versus Vertus AI partner, providing that. It is an emerging model that I'm starting to see now where fintechs are selling services, but they're also selling the expertise on how to use it,
Yeah.
right? And I think there may have been some people in the past who are like, well, why would I sell something if they can't use it? Well, but the fact is these tools are advanced enough where you need to have that kind of experience and understanding. And by the way, the learned experience of, oh, this is how client A is using it, and
Yes.
that'll solve that'll solve problem X for you. Like being able to pull that together, because if I'm a $500 million credit union fighting for the right to survive, right? I don't have time necessarily to be thinking about those kinds of one-off solutions to problems, right? So I think
Well,
that's
exactly.
really brilliant to have that be a part of your partnership with them.
Yeah, we think it's critically important. Like I said, we've seen it for our history as a corporate
Mm-hmm.
where we can do something, but if we don't provide any of that support, whether it's
Yeah,
human support or whatever, it just kind of fails. We want
yeah.
to provide the support to walk you down the path. We want to provide you the support and the education of that, whether we can educate
Mm-hmm.
you or the board. We are going to start to provide assistance in your AI policy. Look, okay, I signed up for Vertus AI. You don't really have an AI policy. I don't know what my digital roadmap looks like. This is the first platform I signed up for. It's kind of
Right,
new to us, so we'll help you with a policy and procedure for that specifically, but then also help you with your digital roadmap. Like, what other data do you have you can utilize?
right.
Is there other solutions that maybe isn't growing your member? Maybe it's a solution to make you more efficient
Right.
or reduce costs here. So helping them with that whole path of the education piece, but then really making them see and allowing them to see the bigger picture of the use of technology. Again, they need to embrace it and update their technology and be better and smarter with the technology and AI,
Mm-hmm.
not only to help you grow and expand, but really it is survival.
Yeah,
You see it in the data. You just see the industry
100%.
consolidating constantly. We're trying to help solve that problem. That's a snowball that's coming down that hill for many, many years, and a lot of people are trying to solve that. And it's hard, but we as a corporate are doing what we can with our capital. That if you're a $50 million shop and you want to really fight for survival, we have the tools to help you. Now you've got to embrace it, and there's a small cost to that.
Mm-hmm.
But with Vertus AI, what we've done with Vertus AI, again, utilizing capital,
Mm-hmm.
we'll have you sign a 3-year contract. And I'm just ballparking a price range right around 35, 36 grand a year.
Mm-hmm.
What we're doing is if you sign up, we'll give you the first year free. And then after that year, if you don't see a value in it, not thinking it's worth it, you can get out of that contract, no obligation. We'll eat
That
that.
that's a
That's
that's a
our
win-win.
well, what's what we say is
Mm-hmm.
that's our use of our capital,
Mm-hmm.
your member capital.
That's
But
right.
it's also us saying, Kris, if you want to survive, you can't not do this. I mean, there's
Right.
no risk to you. And
Right.
we're very confident in that first year that you're going to see enough value in the information you gather from your membership and growing your members and growing loans and maybe expanding your loan portfolio because you're more comfortable with that.
Right.
Maybe pricing your cost of funds better on your certificates. You'll say, we think the savings will be such, or growth in income and margins are such in that first year. You're like, I may have already paid for the years 2 and 3.
Right.
So our message is if you're a $50 million shop and you truly want to grow and survive,
Mm-hmm.
there's no risk here. We're trying to make this as
Right.
your corporate as easy as
Yep.
possible. If you don't want to sign up, fine, but how to put it, that you're going to be behind because you're not
Yeah.
embracing today's technology, and you're
Right.
also saying, and some folks are like, well, I'm going through a core conversion or a card conversion. We get that, but eventually you're going to need to embrace some solution like this, and we're giving it to you about as easy as possible. We're helping as much as we can.
Yeah. I mean, you can always, you can always find an excuse.
Yes,
Yeah, and I understand there. You
and
got to
that's
do.
our industry.
You got to. It is right. You're right. You got to do card conversions. You got to do core
Yeah,
conversions. There's always the regulatory boogeyman that's out there. You know what I
yep,
mean? Oh, regulations are why I
yep,
can't get things
yep,
done. You know what I mean?
yep.
But I think they credit unions have to wake up to the fact, and community institutions and all have
Yeah,
to wake up to the fact that it's innovate, grow, or die. Right, is what it comes down to.
it's a great tagline. It's a great tagline. We were at
Yeah.
GAC, like I said, ran into one of our members and said, typical question. So what are you working on? What's your struggle? So we just need to grow. We need to grow. We need to grow members. We need to grow loans. I just don't have the resources. I got a lot of data, don't know what to do with it, but I don't have the resources to pay for it. And I'm like,
Right.
you need to stop at our booth and we'll talk to you about
Right.
Vertus AI. Oh, you've literally checked every box
Yeah.
that we hear from everyone else. And this is why we have a solution we're trying to deliver you literally for free
Yeah.
that helps you. And you got to do some work. We'll help walk you alongside there. But we think that's a good use of
Yeah.
your member capital to deploy, to provide solutions, to get these small to mid-sized credits uh, ahead of the game with technology
Right.
and data and AI, and be smarter there.
Right. And whether the service is faster payments or AI or anything else, what you guys are providing, and I think is really valuable, is that head start, right? Where do I
Yeah.
start? Where do I begin? What are the foundational elements I need to have in place? You guys have done that. You have that, right? So
Yep.
it's like now we can move you faster into the ideation and innovation part of the
Yeah.
business.
That's where we're at. And the group that wrote the group QuantWorks is based
Mm-hmm.
over there in Durham. They wrote Vertus AI. We have uh, partnered. We had board approval to partner with QuantWorks
Mm-hmm.
to come up with more digital AI
Mm-hmm.
solutions.
Mm-hmm.
And so the board approved a small investment here in the first of the year to start a QSO. And
Mm-hmm.
what QuantWorks is writing now is another platform called Default Sleuth,
Mm-hmm.
where it's looking at member data and looking at charge-offs and delinquencies and kind of being ahead of
Mm-hmm.
improving your charge-off. And if we can pull your charge-offs down a little bit, become
Yes.
more efficient, you save money. Same thing. You save
Yep.
money there, you've paid for the model. So this isn't growing loans or members. This is
Right.
looking at your delinquency. Maybe you have 4 collectors in the office. Well, maybe you can go
Mm-hmm.
down to 2 or 3 and redeploy those folks somewhere else.
Right.
And then also reduce your charge-offs to improve margins. So we've put some money in innovation lab, as we call it, with
Hmm.
QuantWorks to develop solutions going forward. And that's one that they're writing now. We're looking to beta test that here in the summer and the fall. So we're looking folks who want to beta test that to get folks. We have the person that's writing that program for QuantWorks came from the collection side of a credit union, but
Mm-hmm.
we're looking at our bigger credit unions who look at this and say, "Hey, wow, we have 6, 8 people in the collection department, 10, whatever.
Or
Would love to
more.
look at that or more, and we'd love to look at that platform
Yeah.
because we're kind of writing our own thing, but if you don't use ours, at least look at the false sleuth and make it better
Right.
and more efficient. That the mass of the credit union industry can use it, and
Right.
that's one where you not only have the AI data, but then you have the aggregation. So if you have 15, 20 credit unions on default sleuth, now you've got aggregate data on behavior, not only
Mm-hmm.
specific to my credit union, but what's the industry doing in this county, North
Yeah.
Carolina, East Coast?
Yep.
So that just that power of aggregation and AI, we got to embrace it more, and we're trying to
Yeah.
invest in more and more solutions there.
Do you do that's an interesting point. Do you do a lot of information sharing kind of performance basis between your clients so they can get an idea? Am I ahead of the curve? Am I behind? What's happening here? Is
We
that
do,
something you guys do as well?
Yeah, we do it all the time. We don't really do it in a formal way where there's a report out there, a quarterly report that shows
Mm-hmm.
industry trends. There's enough of that out there.
Yeah.
But what we do is more on the consultative side. So, for example, we do asset liability management, ALM,
Mm.
consulting with our credit. So we
Right.
provide ALM reporting and interest rate risk analysis. But what we do is talk to you and say, here's your report for the month or quarter. And, here's the industry trends from the call report. But then when we talk to you, it's like, what we're seeing is we see folks really ramping up the HELOC loans right now because of
Right.
whatever. What we're seeing is people really backing away from indirect lending because.
Right.
So we have that data because we have 75, 80 clients in ALM
Mm-hmm.
from all gamut from small, really tiny trading to some of the bigger ones out there. So we have that information. So we're always sharing that intellectual data to the credit unions and saying, this is what we're seeing. And
Mm-hmm.
then, of course, we get great information from them on what they're doing and what they're struggling with. So we do a lot of that. Again, not on a formal basis, but just more informational. And then we provide a ton of education through webinars, 1-day in-person workshops. We have a 3-day big financial conference in September.
That's
And so
great.
that's another area where we just share, hey, here's what we hear. Here's what we're hearing on the
Nice.
street. And at those conferences, typically will have a CFO or CEO present. Those
Mm-hmm.
are typically our better sessions when a peer presents and they just tell the group, hey, this is what we're working on. This is what we're struggling
Right.
with. This is what we want to do. Anytime we can share that information and data, we think it's powerful. As an aggregator, it's powerful to share with all
Yeah.
of our credit unions.
How many member credit unions do you have?
Member credit unions that have given us capital, about 650.
Okay.
Credit unions that we work with throughout the country, about 12 to 1,300 credit unions.
Oh, that's a great number.
Yeah. So
Very nice.
if you're a credit union in Utah, you don't have to be a member to utilize this.
Oh.
But when you're a member, you get access to our line of credit and you can run on our board.
Ah.
But those are the kind of the two big things. So if you're a credit union in Utah, Iowa, state of Washington, and you want to utilize Vizo Financial, you could use
Mm-hmm.
this for everything. You just won't get a line of credit. Of course, you just can't serve on any of the committees. But other than that,
Sure.
you get full access to our platforms.
So you're collaborating with fintechs and startups to meet those needs. Do you collaborate with the other corporates? Because there's a number of corporates across the country. Do you collaborate with them as well?
We collaborate with them, and we have for a long time. There's 11 total corporates throughout the country now left. There's 4 to 5 that are the biggest. We're one of them. We have partnered with them pretty much their entire history. So we're part owners of Primary Financial that provides brokered CDs, and
Mm.
we've done that for a long time. I'm chair of that board, and it's all the corporates own that. And there's a
Mm-hmm.
5-member board of corporate CEOs. We're part owner of CU Business Group. It's a business lender that's based out of Portland, Oregon. Also, I'm on the board of that as well, and owned by not all the corporates, but many of the corporates to
Mm-hmm.
provide business lending solutions to credit unions that don't have that platform.
Mm-hmm.
We've partnered with other corporates for TransCapture, a payment platform that does ACH
Mm-hmm.
and wires. So we've collaborated with corporates pretty much our entire history because, again, as an aggregator, partnering with other corporates and aggregating at a bigger scale just
Mm-hmm.
provides solutions downstream to our credit unions and our other users at a much cheaper price. So we've always done that, still do that today.
Mm-hmm.
We have strategically said, internally with Vertus AI and default sleuth and some of the things we're doing, we're going to keep that internal at this point. We can fund
Mm-hmm.
that internally.
Mm-hmm.
That kind of gives us, hate to say it, at the corporate side, it's very much like at the credit union side.
Yep.
We're partners, we collaborate, we're on boards together, but we also compete with one another.
Sure.
And so for us to kind of stand out as Vizo Financial, having an exclusive with Vertus AI nationally is powerful for us.
Mm-hmm.
The default sleuth and the relationship we have with QuantWorks and creating some of those solutions, we can fund that ourselves to this point. We will
Mm-hmm.
do that. So we will look strategically to fund and do things on our own to be specific to Vizo Financial, but have always partnered with other corporates
Mm-hmm.
and other credit unions. We'll still continue to look to do that as well. I think it's important long term to continue to do that.
Where do you think the business of a corporate credit union is 10 years from now?
It's a great question. We ask that internally all the time. I think the business, it's funny, when my previous boss, David Bramer,
Mm-hmm.
was leaving Vizo Financial to retirement, he was cleaning out his desk. And of course, a lot of the crap that he was cleaning out landed on my desk that ended up in the trash. But
This is the way.
this is the way. This is your stuff, Fred. Well, no, you've had this for 20 years, David. I will get rid of it for you. But there was one 20 to 30 page document in there. You could tell typewritten on a
Yeah.
typewriter. It was dated 1993, and it talked about the corporate industry and the credit union industry. and I read it. I threw everything else away, but this one I kind of caught the glimpse of the first paragraph. I'm like, interesting, and I read it. If you blacked out 1993, you read that. It's you could say the same thing today.
Wow.
The big cranes are getting bigger. The industry's consolidating. We're probably going to go away. What do we do? How do we fix it? Generally speaking. And as I'm reading this thing, you could have changed the date to April 2025, and it
Wow.
would have said the same thing. So we have been asking that question, battling for 20, 30 years, and here we
Yeah.
are. So the next 10 years, I think it looks the same. We've been around for 50 years, and our cranes see, even our large cranes see a huge value in us as a liquidity aggregator and provider. That's what we started with. It's still what we
Right.
do today. So providing that liquidity and overnight money of funds and settlement of transactions. 10 years from now, it'll be settlement of an instant payment. I mean, it's happening today. So there's still a lot of checks being written. There's still a lot of wires and ACH being done. So that settlement still continues. We've been doing it forever. Settlement of instant payments is happening at a very slow pace. So 10 years from now, you'll still be settling payments. It'll just be instant payments. The crane's still going to have to settle their members' payments. It's just going to all be instant. There may be a check or two floating around out there. You may see wires and ACH, but those volumes are heading down. So I think in 10 years, we're still in the payments area. I think we're still in the liquidity area, which we've been doing forever, for 50 years. That really doesn't look any different. We manage overnight money, and we provide these cranes lines of credit that they need for their day-to-day transactions. So when liquidity gets tight, they need to fund that somehow. Even our large guys see a value in that. So that core, strategically, we've said internally and with our board, we don't want to forget where we came from and what we are as a corporate, as our core. Because in 10 years from now, we think the industry looks the same. It's not a check anymore; it's an instant payment. But the guts of it pretty much happening the same way. Where we're at today is in 10 years, I think we've got to, and we as a corporate need to embrace relationships with technology and AI and data, because that's becoming a thing. It is a thing. And for the small to mid-size, as we've said, you got to embrace it. It's going to be a long-term road to get to that point. So in 10 years from now, I think we're doing our core corporate stuff, but also embracing and have a lot of partnerships and investments in AI and technology, whatever that looks like at that time, that supports the credit unions. And having, I think, at the corporate, at the individual side, we have 160 employees. I think we'll have less employees, higher paid, more consultative type folks, and less clerk day-to-day folks. There'll be
Yeah.
folks that are going to be AI specialists, payment specialists.
Right.
And we're kind of there today, but I think there'll be more of that going forward.
People using AI, to solve those problems or to provide that consultative experience.
Exactly.
So if you were somebody coming out of college and you knew everything you knew today, right? What problem would you try to tackle?
No, that's a great question. In the credit union industry specifically, or
Yeah,
just general
credit union, finance, fintech, services, community institutions. What's the problem you would try to solve?
That's a great question. I think in the credit union industry, if I was coming out today, I would embrace, and there might be viewers that may not like my answer here.
That's okay.
But
be controversial, Fred.
Yes, yeah, I'm going to mix it up here a little bit, throw it out there. I think the value of the credit union industry and who we are as a credit union, what we do, and our core value is very important. At the same time, you look at our industry today, it's not your grandfather's credit union. You ran the steel credit union. I was at the teachers credit union. You and I'd share policies, procedures. That's what we did. We went to lunch together, and folks still do that and collaborate. But the attitude today is, do you want to merge, Kris, or do you want to merge with me? We're looking for merger partners. How do I survive and grow? I'm a small $20 million shop, and that credit union is merging away. That's terrible, because that credit union is a part of the community, and there's really a lot of very well-run $20 million shops that should stay as much as possible. But there's a lot of cranes out there still that aren't very well run, and we as an industry try to save that credit union, but we don't ask, is that member behind there better off with that credit union, or are they better off at a larger credit union? If we change the sign out front to a different credit union that had a better online banking system, better loan rates,
Yeah.
better deposit rates, better risk, cybersecurity.
Mm-hmm.
Is the member better? We as an industry keeps trying to save the industry, and sometimes the member is probably better off at
Mm.
another shop that's better run, better managed, and sometimes they go to a bank that may be better run. Or so I
Yeah.
think when you come out of college, I I just did a presentation at the Emerging Leaders that the Carolinas Crane League did first of the year, and I
Mm-hmm.
didn't want to be as pessimistic, and I think I came off probably as pessimistic as younger leaders. They're full of energy, and it's the industry, it's the movement,
Yes.
and it's like keep it, but also understand the movement today is different than it was. There's that passion, that movement, the importance of a credit union, but you need to kind of keep your eyes open of what this industry is made up with now. The
Mm-hmm.
leagues are merging. We have 11 corporates instead of 46, and it's probably not going to be 11. 10 years from now, your question,
Right.
probably 5 or
Right.
6. The
Right.
credit unions are consolidating quickly, and no
Mm-hmm.
one's been able to stop that snowball. We're trying, but
Yeah.
everyone, a lot of people are trying. It's there. You see it today with taxation. Seems like it's got more meat to it.
Mm-hmm.
Fees, overdraft protection. Maybe we have one regulator, and it's not the NCUA. Maybe the NCUA goes away. I mean, probably not, but that's
Yeah.
being discussed.
Yep.
So you come out of college, embrace the movement and for what it is, but also keep your eyes open to. We're just like any other industry. If you and I come out with a really cool soda,
Mm-hmm.
it will be good for a while, be able to be a disruptor, but eventually probably be bought out by Pepsi or Coke. There's
Right.
two
Right.
main soda, right? So that's just
Right.
the way the capital markets work in this country. Um, so in the credit union industry, there's a lot of credit unions. We have too many. We're trying to
Mm-hmm.
save it. We're trying to keep
Yep.
this thing
Yep.
together,
Yep.
but I think it's natural that some of the small and in some mediums just go
Yeah.
away naturally. So embrace the movement for what it is and the
Yeah.
value of a credit union. Don't forget that, but also keep eyes open and accept the
Yeah.
fact that the industry is consolidating, and then really look at how do we make the credit unions smarter, not try to save them, smarter,
Right.
better, more efficient.
Yeah.
And that's probably technology, and embrace
Yeah.
technology and data, focus on that and try to deliver that to the movement. That
Yeah.
will be the one that saves it.
Yeah. Remember the heart and the mind, right? The heart
Exactly.
is why I'm doing it, why
Yes.
credit unions and community institutions are important. But the other is it's still a business, right?
Yeah.
It's gotta support itself. It's gotta drive forward. It's gotta be able to do that. You
Yeah.
can't just live off heart.
No. And you can be in the finance game. That hasn't changed. Lending,
Right.
investments, but clearly the data and the AI space, it is not a fad. I believe it's here to stay, and it's a desperate need in the industry. And so
Mm-hmm.
it's the problem to solve there is to try to, like Vertus AI is trying to solve a little piece of the puzzle.
Yep.
Default Sleuth is trying to solve a little piece of that puzzle. Is to embrace, try to look at trying to find solutions. Don't try to solve the
Mm.
industry's problems in kind of one big model. It may be little pieces of model that helps them become more efficient in other ways, but it's going to be technology and AI data. They've got to
Yeah.
embrace it because it's happening in the UK. Open banking's happening. The share of
Yep.
data nationally, and
Yep.
the younger generation wanting you to have their data, it's here. So coming out, it's educating the cranes that that's where they need to be, and help and find solutions delivered to them that get them to that spot.
Yeah. Find a solution that solves the problem at the lowest level possible. Right.
Exactly.
Because
Yep.
if you try to go out and build something that's gigantic, that's going to solve everybody's problems, the complexity of that, the acceptance of that, the cost of doing that becomes prohibitive in a lot of cases. And instead, if you look at somebody like Chime, right, who is a number
Yep.
one competitor for credit unions, right, they call their customers members,
Yep.
right? If you look at Chime solved one problem first, and that was how do I get ACHs credited to checking accounts
Mm-hmm.
sooner,
Yep.
right? They solved one problem, and then they've built on that. They've built on that success. Credit unions, I would argue, need to do the same thing.
Yeah, I agree completely. You look at a
Yeah.
SoFi that's student
Yep.
lending, and now they're doing the same thing. And those are some of
Yep.
the slides I pulled up for this emerging group. So you hit
Right.
it right on the head. I pulled up the slide deck. You just go out to their website and just do a
Yep.
screenshot, and it's not SoFi student loans. It's credit cards, it's auto lending, it's business lending, and all. There was a section in there about starting your account for your 14-year-old. and
Right.
embracing that. So, you get some of the credit unions are like, well, you got to be 18 to do this, you got to do this, you got to do this, can't do that. They're doing it elsewhere. You've got to be
That's right.
more comfortable with that. Credit cards. I remember years ago, our daughter was heading to Italy for a trip for school, and it's like, to my credit union's card work, not internationally. Maybe get some money orders. I'm like, really? I mean, that's where we're at.
Yeah.
You hate to say it, but you look at Capital One. I was on chat, Capital One, when chat started to be a thing. Got, I had a card, pre-approved card. They delivered a card, and it's backed by me, but with her name on it.
Yep.
Fully international. And it's like, this was 10, 15 years ago. So it's like, even today, it shouldn't be that hard. People are doing it. Capital One's, the JP Morgans, but it's the Chimes, it's the SoFis, it's these other guys that are also doing it, capturing that market. And if you're not as flexible and open to that, whether it's a limitation with your core or some other things, you got to look at technology and embrace it and get better at that member service. The credit unions always said we had the best member service.
Right.
I don't know if the data says that as much anymore, because the younger members not going to the branch anymore. They're online, and if you're online, relationship's not great. They're going to go somewhere else. So
that's right. Well, I am certainly happy that the credit union movement has you as a partner, and has you as the ability to help with credit unions, exposing them to new opportunities, new service models, ways of collaborating. I think it's really important for those credit unions and for the movement at large. So thank you for what you're doing. Thank you for supporting them. And thank you for being on the show today. I really appreciate it. If somebody wants to find out more about Vizo Financial, how should they find out?
They just reach out to me at feisel@vfccu.org, my email, or just go straight to the website, www.vfccu.org. And go to that website. You can find all kinds of information on Vizo and a lot of the solutions we provide. And
That's awesome.
We're out and about everywhere. So at the booth anywhere else, we're very visible. So if you don't see us, you're not looking hard enough. So next conference at a booth or whatever, just reach out to stop by the booth and let us know.
That sounds great, Fred. Thank you very much.
Thank you very much for the invitation today, Kris. Appreciate it.
I really appreciate Fred joining us. I thought it was a fascinating conversation about corporates and how they really are going to play an important role in the future of credit unions. If you like this content, please like and subscribe on your platform of choice. Be sure to check out our LinkedIn page for some bonus materials, and we will see you next time.